Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Monday, the 1st of October. Starting off with Cyanconnode. Here you can see that we have the follow through from the gap through the 200-day moving average and the bear trap gap reversal from below 8 pence last month. The view at this stage is really while we hold above the 200-day moving average of 12.18 pence. The target here 20 to 25 pence, which would take the shares back to where they were at the beginning of the year. Stock which is also looking quite frisky today is European Metals. We had the break of the triangle there, post-February triangle around the 19 pence or the 50-day moving average level, 19.85 pence. While we hold above that, looking for a move back to 35 to 40 pence, especially if we can get a decent close above the 200-day moving average of 24 pence today. Jkx Oil Gas finally came good last week, basically, with the long green candles and the break through the top of this triangle as well, and the 50-day moving average. The view at this stage is that we could head as high as 75 pence. That's upgrading the target from 45 pence before, especially while we hold above, or we get a decent end of day, end of week close above the initial May resistance at 36.6 pence. On to stock which is doing and has been doing rather well over recent days and weeks. September, the big turnaround month for Orosur Mining. I know there's a few people suggesting that the rally here is overdone, but at this stage it looks like we've had a fresh breakout on Friday through 9 pence and that resistance line from earlier in September. While we hold above 9, target here as high as the top of an August rising trend channel at 18 pence. So looks like this move here was a mid-move consolidation, not the end of the line for the rally at Orosur. Tried on Powerhouse Energy many times in terms of looking for a recovery. Best one so far looks to be the one that we're seeing at the moment, in the sense that we've had this converging triangle breakout through 0.33. Need to see an end of day close, end of week close above both 0.33 and the 50-day moving average of 0.32, but at least the start of an attempt here to break out and head back to the main resistance there, which is the 200-day moving average at 0.48. Stop loss on the bull argument at the moment back below 0.29, which is the uptrend line from August for those who are feeling brave. Stock which is also in recovery mode after a rather brutal period is Salt Lake Potash. Here we've got a classic falling wedge breakout here, gap through that, and also the 50-day moving average of 26.62. We can close here today or higher. One would be hopeful of a return to the best levels of the last few months at 30 to 35 pence, or probably around 34 to 36 pence on this situation, especially as we had a narrow bear trap back below 24 pence last week temporarily, and also were backed by bullish divergence in the RSI window. So plenty going on there at Salt Lake Potash. Stock which is up on the radar here at the moment as well with a classic triangle breakout is Tomco Energy. 5.75 pence, the top of that triangle. And while we hold above that, looking for at least a retest of June resistance at 11 pence, or just shy of 11 pence. Stop loss back below the 50-day moving average at 5.25 pence. And keep coming at the moment. Another situation which is a new one and an interesting one. Thruvision. I'm a bit late on this actually, but nevertheless, we've broken through that resistance of 28 pence from August. And while we hold above that, we could have a new leg up to 45 pence, which would be the top of that rising July trend channel, only back below 25 pence, and the floor of that channel really ringing any alarm in terms of potential failure on the breakout. A couple of stocks to finish, which are basically requests from viewers of this slot. First is Tern, where we have bounced off this the all-important May support line around the 13 pence level, 13 and a half pence on that. And while we hold above that, could see at least a rally back towards the 50-day moving average at 19 pence. But we really need to break that and the resistance line from June to get the show back on the road in a big way for the bulls after the rather painful decline from 50 pence plus that we've seen. Final request as well today comes in the form of Physiomics. Here we've got the shares look to be bumping around or along the bottom. 3.84 pence was the intraday support both today and on Friday. An uptrend line, a minor uptrend line there from July. So basically, while we're above 3.8 pence, looking for the shares to retest the best levels of the last couple of months at 5 pence plus. But if you're cautious on the shares, maybe you want to see an end of day close back above the 50-day line at 4.17 pence before assuming that the pullback from the highs of last month is finally over. That's it from me. More tomorrow.